Good afternoon, Dr. Philipp Bagus, and thank you for agreeing to talk to the Gold Money Foundation.
Well, good afternoon.
You wrote your PhD on the theory of deflation. Is the Eurozone currently staring down the barrel of a deflationary depression?
No, basically, because of the fear of deflation that there exists, governments and banks fear deflation very much. Bernanke said that he will do anything to prevent deflation, and the same happens with central bank bankers in Europe. So they will do anything to prevent it, and that's actually the reason why I thought it would be good to write on the topic of deflation, to get rid of this irrational fear of deflation. So you can be sure that in the Eurozone they will also do anything to prevent deflation, and they have the instrument to do it, just print money. If they want, they can just print money, give it to governments, and governments will spend it on anything, and prices there's a tendency for prices to rise, so they can prevent it, and they will prevent it because of their ideology.
So you think that what they're currently doing in combination with debt monetization by the ECB, do you think that the Eurozone can keep muddling through with those policies? Do you think that it's sustainable, or do you think that it's heading for a crisis if it just keeps on? If the ECB and the European Union leaders carry on doing as they're doing now?
Yeah, I think they can probably muddle through still a little bit for some years, just keeping to buy government bonds well, it all depends, of course, on the confidence. With the fiat currency, the value of the currency depends very much on the confidence, and this might get lost very fast by any event, the collapse of a government or a downgrade by a rating agency. But they have been managing this confidence very well in the past, and probably they have much ammunition left. They can just keep on buying government bonds, so inflation will probably only slowly build up.
In your book, The Tragedy of the Euro, you make the interesting point about how banks were able to use sovereign bonds from countries like Greece and Italy as collateral at the ECB for short-term loans, the kind of repo transactions. Do you think that, does that system need to be eliminated if we're to get rid of the kind of moral hazard that you're talking about, where countries have an incentive to borrow and banks have an incentive to lend because they know they can always turn around to the ECB and borrow, get money back instantly?
Yes, this is a big problem. If you're a Greek government, you just spend, you don't tax, you just spend, and you pay with writing paper, government bond, you give it for the bank gives you money, the bank takes the government bond, goes to the ECB as a collateral and receives new reserves, can expand the money supply. And the problem is that any government can do it in the Eurozone, so there's incentive to impose the cost of this policy, because the cost of the policy is that prices rise in all over Europe, so that you can externalize part of the cost on users of the currency in foreign countries. So this is a big problem. So you could easily solve it, this moral hazard, by saying, okay, the ECB does not accept government bonds as collateral anymore. But then, of course, then all governments would collapse immediately. I mean, they would have to default immediately. You have to think that central banks now actually, in the banking system, one of the main purposes is to finance governments. So if you stop this financing, they go bankrupt immediately. But of course, if you say no to this anymore, it would solve immediately all the moral hazard problems, and the euro could be very stable.
Do you think that there needs to be some form of euro bond introduced, some kind of collectivization of European debts, if monetary union between all these countries is to work, or not?
They certainly are pushing in this direction, and to some extent we have already euro bonds by the rescue fund, the EFSF, that is guaranteed by all governments, and in the future we can give loans to individual governments to bail out banks and give them credit lines, and these are backed by all. So to some extent we have already these euro bonds, but they want, yes, to get more into that direction. In any way, we had this from the very beginning of the euro, because there was the implicit guarantee for all for government debts, for all government debts in the Eurozone, and all could issue debts that at the end would be supported by the ECB and the stronger government. So what we see now, we get this redistribution that existed from the beginning of the Eurozone. It gets more and more explicit, and it gets more tight. And the Eurobond would be, well, the most obvious symbol for this redistribution that was there from the beginning.
Do you think it makes sense for countries like Spain, Italy, and Greece to remain in the Eurozone? A lot of people are saying that they should go back to their currencies. It's almost conventional wisdom now that they should. They were too, these economies weren't suited to being in a currency union with the likes of Germany and Holland. Do you accept that conventional wisdom, or do you think that it's flawed?
It's flawed because you can have different structures of economy, different cultures, and have the same currency. So the problem is what we said before, that they can all finance themselves with the ECB. Then you get the problems. But you can have France, Germany, Italy, Spain in a 100% gold standard, and there's no problem. The gold standard will remain. You cannot finance your deficits anymore by money printing and impose the costs of others. About remaining in the Eurozone, the question, well, I would recommend any country to leave the ship that is drowning. But of course, if you don't do any reforms, like Greece, if Greece would now leave the euro without doing any reforms, it would be a total disaster, because there would be a mass exodus of entrepreneurs, of investors. They would all leave the country. So if you leave the euro, make sure that the new currency that you introduce is stronger than the euro, otherwise you get problems. How do you achieve this? Well, you could introduce a gold drachma, a gold peseta, or you can even have a paper currency, but you have to reduce the deficit, privatize your public assets, eliminate your public debt, and deregulate your economy. Otherwise, it might be better to stay within the euro, because then you have the pressure from the outside that you do these reforms that are necessary.
Do you think that German politicians and Bundesbankers will reluctantly condone further debt monetization by the ECB as the price of European unity?
Well, they have been so far, so why shouldn't they do it in the future? You should distinguish between the German politicians and the Bundesbankers, because the Bundesbankers are more against it than the German politicians. If the public opinion in Germany starts to change or starts to express itself stronger, even stronger than now, then there might be hope that they will stop the monetization. For example, if there's a new party emerging in Germany, a new German Tea Party, for example, and it gets in the next election, because price inflation has risen to 10%, it gets 30% of the votes, then probably there will be a limit.
What do you think the implications of the current Eurozone crisis are for the EU as a whole?
Well, there's a tendency for more centralization. There's a big danger that we get a fiscal union that then will harmonize tax rates. We saw it already in the case of Ireland, that they said we will bail you out if you raise your corporate taxes. So if we get a fiscal union, there will be a redistribution between countries. They will start to harmonize tax rates, and once tax competition is eliminated, they will rise taxes. So there's a tendency for a new central state in Europe to develop. This will then continually rise in power and reduce individual liberty. So this might be the big consequence of the euro, which in my book I argue was for some people the intention behind its introduction.
There have been rumours in recent weeks, although they were quickly denied, about the possibility of Germany utilising its gold reserves in order to fund the SF. Do you think this is a sign that gold is slowly regaining respectability in the eyes of economists and monetary thinkers?
Yes, more they get aware of its importance. I mean, the central banks of emerging countries are also buying it. And the Bundesbanker said, no, we won't give our gold away. So they get more aware of the importance of gold. Before they thought it's just something on our balance sheet that is not important at all. But now, yes, they get more aware of it.
Final question: what do you think ordinary people need to think about doing to protect themselves from the economic issues they're likely to confront in the years ahead?
Well, to be on the safe side, because the danger is that we get a more centralized European state and higher inflation, that the ECB continues with its inflationary policy, with ridiculously low interest rates, buying government debts, financing the EFSF. So how do you protect yourself against that? Well, you sell your currency and buy real assets. Precious metals, certain stocks rise also in price inflation periods, or real estate if it is not at bubble prices like in Spain.
Dr. Philipp Bagus, Assistant Professor of Economics at Rey Juan Carlos University in Madrid and author of The Tragedy of the Euro. Thank you for talking to the Gold Money Foundation.
You're very welcome. I thank you.
Subscribe to the Gold Money newsletter at www.goldmoney.com to receive email updates on new articles, videos, and iTunes podcasts from our Gold Research section.